Hello everyone, welcome to Oliveboard. This is the second session of our most important sections discussion series in which we are discussing the most important sections of all the acts which are there in our BRBL paper. So today we'll be discussing the sections from Module B. Module B consists of the Prevention of Money Laundering Act, the Negotiable Instruments Act, Foreign Exchange Management Act, and the Payment and Settlement Systems Act. A few portion of the Transfer of Property Act and the Indian Contract Act is also there, but that we'll be covering in our module D. All right, so let us start. First unit, that is unit 8 of our module B, is the Prevention of Money Laundering Act of 2002. And section 3 talks about the offense of money laundering. So, as per in the act, we do not have a definition of money laundering, but section 3 states that whoever directly or indirectly attempts to indulge, or they are knowingly helping or a party, or they're actually involved in any process or activity connected with the proceeds of crime, right? Including its concealment, possession, acquisition, use, and projecting or claiming it as the untainted property. They will be guilty of offense of money laundering. This is given in section 3, the offense. Then section 4 tells us about the punishment for money laundering. So, whoever commits the offense of money laundering will be punishable with rigorous imprisonment for a term which shall not be less than, it shall not be less than 3 years, and it can be extended to 7 years, and they will also be liable to a fine, right? Now this term which may be extended to 7 years, it has been changed, and it has been now changed to 10 years. So now 3 years to 10 years will be the imprisonment. All right. Then we have section 12, which talks about the maintenance of records. Now, this is the importance, the role of banks and financial institutions that they have to play so that they can prevent this money laundering offense. So, maintenance of records. This is in the section 12. So, the financial institutions have to maintain all records, including information relating to transactions, which we'll be talking about. Then they also have to furnish to the directors within the time prescribed, in the manner, in the nature, the value of the transaction, the parties involved in the transaction. They also have to maintain the record of documents for the identity of the clients and the beneficiary owners. All right, this is given in our section 12. Okay, now next we have the power of director to impose fine, which is given in section 13. So section 12 to 13 is important. 12 talks about that we need to maintain records. 13 talks about if, let's say, there's a delay in furnishing the record, then the director can impose fine in such situation, right? Fine can be imposed by the director. Then 12 double A talks about enhanced due diligence. This was an amendment in 2019, which resulted in the addition of the section 12 double A. So prior to the commencement of each specified transaction, the banks have to verify the identity of the clients, right? So they will check the Aadhaar number or other important documents. Additional steps to examine the ownership and financial position. What are the sources of funds of the client, right? The purpose behind conducting the specified transaction. This is talks about the enhanced due diligence. All right. So this is given in section 12 double A. All right. Next, we have certain rules. Rule 3, 4, 6, and 8. These rules have been introduced because to introduce a new amendment or a section, a whole process is to be formed. But the rules are formed by the central government in consultation with the Reserve Bank. for the prevention of money laundering, maintenance of records of the nature and value of transactions, the procedure and maintaining the manner of maintaining the time for furnishing information. So, Rule 3 talks about the maintenance of records. Which records have to be maintained? All cash transactions of the value more than 10 lakh rupees or its equivalent in foreign currency, series of cash transactions which are integrally connected to each other. Individually, they are below 10 lakh rupees, but collectively in 1 month, the aggregate exceeds the 10 lakh rupees. Non-profit organizations transactions value more than 10 lakh, cash transactions where there are forged or counterfeit currency notes, any suspicious transaction, all of these reports have to be or records have to be maintained. Cross border via transactions of value more than 5 lakh rupees, purchase and sale of any immovable property valued at 50 lakh rupees or more, these records have to be maintained. So these are given in section 3. Then what information will be contained in the records is given in the rule 4, not section 3 but rule 3. And rule 4 talks about what is the nature of the transaction, the amount of the transaction and the currency in which it was denominated, the date on which the transaction was conducted, and the parties to the transaction. So the maker and the beneficiary. Then rule 6 talks about the procedure to be followed when we are maintaining information, whether the records are to be maintained in hard copy or soft copy or both. So it will be prescribed by RBI or SEBI. Both RBI and SEBI have the power to specify the manner in which the transaction should be maintained in hard and soft copies. And finally, Rule 8 talks about the um, procedure for furnishing information to the director, right? So the principal officer of the reporting entity, the bank or the financial institution, will furnish the information of all the transactions that we have discussed in the rule 3 every month to the director by the 15th of the succeeding month. So all the transactions that have taken place which come under the rule 3 in the month of April, by 15th of May they should have been reported to the director, right? By fax or electronic mail or any other media. Then information that we have discussed, the manner in which information will be furnished. And if let's say there's a delay of not reporting a transaction or there's a delay in rectifying a misreported transaction, this will be constituted as a separate violation. All right, so this is given in rule 8. So important sections we have discussed and the rules. That is all. Nothing more than this is important from your PMLA. Next act is the Negotiable Instruments Act. Now in the Negotiable Instruments Act, we discuss about the various negotiable instruments, right? Like we have the check is there, promissory note, bill of exchange, what should be the characteristics. Then important section, first we have section 89 which talks about the payment of instrument on which the alteration is not apparent. So basically, whenever there has been a material alteration in the check or any other negotiable instrument, the bank or the financial institution, they can cancel or they can reject to fulfill the obligation, right? If let's say there was the material alteration, still the bank continued, it will be the fault of the bank. Now let's say the alteration is not apparent, something that has been changed but it is not apparent, it is not visible to the naked eye, then the bank is provided protection under section 89. It deals with the cases where the payment is made by a bank on the presentation of an instrument which is forced by alterations, but they are not apparent. All right. So any bank, they will be given protection here. Then presumptions as to the negotiable instruments are given in section 118. Presumptions. Like the negotiable instrument should be made in due course, the person presenting should be the holder in due course. They should not have just found the instrument lying somewhere. It should not have been procured through theft, right? So this is given in section 118. Presumptions of the proof of protest is given in section 119. Basically, whenever a check dishonor has occurred, we will accept it. The court is going to accept it unless it is proven otherwise. Right? So this is given in section 119. Then section 13 of the Act, non-liability of banker receiving a payment of check. Now, what is the section 13? Basically, if the bank has taken all the necessary steps in verifying, right? The time has been checked, it is not a post dated check, everything of consideration as to date, as to time of acceptance, as to order, everything. Then it is the liability of the bank that they will make the payment, right? Section 118 and 119, they lay down the presumptions. Section 118, these are the presumptions of consideration, that the negotiable instrument was made or drawn for some consideration. The date is for, it was bearing a date and was made on such a date. As to the time of acceptance, it was accepted within a reasonable time. The date of transfer, the order of endorsement, stamp, this is given in section 118. Section 119 says, in a suit upon an instrument which has been dishonored, the court shall, on the proof of protest, presume the fact of dishonor unless and until such fact is disapproved. And section 8, for example, the definitions of the different negotiable instruments, like promissory note is given, instrument containing an unconditional undertaking signed by the maker to pay a certain sum of money only to or to the order to of a certain person who is the bearer. All right. Similarly, bill of exchange definition is given. Bill of exchange which contains in writing an unconditional order, again signed by the maker, directing a certain person to pay a certain sum. Right. So section 13 talks about this. Then section 131 again talks about the enhanced due diligence. Section 131 says that the payment, it is the banker's duty to pay, but the payment should be done in due course. So enhanced due diligence is given in section 131. Then section 138, dishonor of check for the insufficiency of funds. When the check is there but there are not enough funds in the account holder, so the check will be dishonored. This is given in section 138. All right, the dishonor of check. Section 141 talks about the offenses of companies. When there has been any of these offense which are defined and the offense is by a company, so what will be the role, how will the proceedings work, that is given in section 141. All right. Then section 143A and section 148 are very important. These sections have been introduced in 2018, right? Section 143A, the new provision was introduced wherein a competent court, while trying a check dishonor offense, is empowered to order the drawer of the check to pay an interim compensation. An interim compensation not exceeding 20% of the check amount to the complainant. If the drawer, for example, pleads not guilty to the accusation made in the complaint, right, then they will be heard only after making a interim compensation of 20%. All right. If, let's say, the time period is given, it also provides that this interim compensation has to be paid within 60 days or within extended period of 30 days if allowed. And if the drawer of the check is acquitted, then it will be repaid. The complainant will repay the drawer this 20% of amount. So this is given in section 143A. Then section 148 talks about the mode of service of summons, right? In case an appeal is filed by the drawer against the conviction which has been made in section 138, which talks about the dishonor. So the appellate court may order the appellant to deposit such amount which shall be minimum 20% of the fine, and it will be paid in addition to any interim compensation which had been paid earlier under section 143A. So this is related to an appeal. When the court gives their decision and the drawer still wants to make an appeal to the appellate tribunal, again they will have to submit 20% which has been of the award which has been given by the trial court. All right. So 20% earlier under section 143A and 20% now of the amount which has been decided by the trial court. All right. So these are the important sections of our Negotiable Instruments Act. Third act which is there in our module B is the FEMA, Foreign Exchange Management Act, which has been introduced replacing the Foreign Exchange Regulation Act of 1973. All right. So first we have section 3. Section 3 which talks about the various definitions, the terms which are given in our FEMA, right? So section 3 talks about the rules or regulations made under the act or with the special permission of RBI. So no person shall deal in or transfer any foreign exchange without an authorized person's permission or involvement. They cannot make any payment for or for the credit of any person resident outside India. They cannot receive otherwise through an authorized person any payment. They cannot enter into financial transaction. So these are given in section 3, that authorized person, authorized person should be there. Now, what is the definition or eligibility of the authorized person? This is given in section 10. Authorized person means any authorized money changer, any authorized money changer or dealer, offshore banking unit, any other person which is authorized under FEMA to deal in the foreign exchange or securities. Then section 12 contains the powers of RBI to inspect the authorized person, because authorized persons are appointed by RBI. So powers with respect to authorized persons is also given in section 12. To appoint authorized person, no, the person so appointed will deal in the foreign exchange as per the rules and regulations, right? Their inspection will be conducted by RBI. This is given in section 12. Then section 13 talks about the penalties, contravention, penalties, adjudication and appeal. So if any person contravenes any provision of this act, any rule, regulation, notification or direction, they contravene any condition which has been issued by RBI, then upon adjudication he will be liable to a penalty up to 3 times, thrice the amount sum involved in the contravention, where the amount is quantifiable, or if it is not quantifiable, and up to rupees 2 lakhs. So if it is quantifiable 3 times, not quantifiable up to rupees 2 lakhs. And if it is a continuing one, then a further penalty of rupees 5,000 per day after the first day during which the contravention continues, right? Now, there's no restriction on dealing in foreign exchange, but if you deal in foreign exchange above the prescribed limit, for example, if a person is found to have acquired any foreign exchange, foreign security, or immovable property situated outside India of the aggregate value exceeding the threshold prescribed, then they will be treated as this will be treated as a contravention, right? So above the prescribed threshold, and penalty we have already discussed. Then there's a directorate of enforcement which is given in section 36. The directorate of enforcement, They will deal with they will have the power of search, seizure, etc. The Directorate of Enforcement and other officers not below the rank of an assistant director. Assistant director. What powers do they have? They can investigate the contraventions of the provisions of the Act, the rules and regulations which are framed thereunder. Then any class of officers can be authorized by central government. The central government can also empower other officers. And then we have section 37A, special provisions relating to assets held outside India. Special provisions. This has been introduced with the amendment of 2015. So let's say upon receipt of any information, if the authorized officer, they have a reason to believe that any foreign exchange security or immovable property is suspected to have been held in contravention of section 4, then they can pass orders, they can record the reasons in writing, they can seize the value equivalent situated in India. All right. So if the property has been acquired outside of India, we cannot take the direct seizure of that particular property. What we will do, we will seize the property equivalent situated in India. Right. So the order of seizure, the relevant reasons material will be placed before the competent authority appointed by the central government. Then the competent authority will dispose the petition if filed within a period of 180 days. All right. So these are the important sections of our FEMA Act. So you need to remember each of the provision. And then finally, we have the Payment and Settlement Systems Act, again, which talks about the regulation and supervision of the payment systems in India. And who is the authority for the related matters? RBI. Okay. So first we have section 3. Section 3, which deals with the designated authority. Definitions are given in the section 2, but very basic definitions like what is the meaning of gross settlement, what is the meaning of bank, derivative, and so on. Designated authority will be, we have already discussed, RBI, right? So RBI will be the designated authority for regulation and supervision. RBI will exercise the powers, perform the functions, discharge the duties conferred on it by the Act. Now, the board which will be constituted under RBI, the Payments Regulatory Board. RBI, through its Payments Regulatory Board, will do this supervision and regulation. It will consist of the governor of the RBI, who will be the chairperson. The deputy governor of RBI will be a member who is in charge of the payment and settlement systems. One officer of the RBI nominated by the central board, and three persons to be nominated by the central government. These will be the members. Then section 4 talks about that no payment system can operate without RBI authorization. So the no other person than RBI can give this authority authorization, and no person can commence or operate a payment system except under in accordance an authorization issued by RBI. So even for the continued operation of an existing payment system on the commencement of this act for a period not exceeding 6 months, they have to obtain the authorization, right? Important sections are section 5, 6, and 7. Section 4 says that you cannot operate without RBI's authorization. Section 5 says how are you going to apply for the authorization, right? Then section 6 says the scrutiny that will be conducted, and section 7 says the issues or refusal of authorization. Okay, so section 5, that the payment system has to apply for authorization with RBI. Section 6, after proper scrutiny and inquiry by the RBI, they can authorize or refuse this application under section 7, right? So what is the need for the proposed payment system? the technical standards have been maintained or not, terms and conditions, the manner in which the transfer of funds will be done, gross settlement or net settlement, the process of netting of payment, financial status, interest of consumers, monetary credit policies, everything will be checked, right? So section 5 and section 7 is there. In section 8, revocation of authorization. Once the order has been given, authorization has been given, the authorization can be revoked anytime by RBI if, let's say, the company is no longer continuing with the payment system, or they're contravening, they are not fulfilling the obligations, they're not furnishing information, maintaining records, so RBI can cancel their authorization, right? And the aggrieved provider can also make an appeal against this. This appeal will be made to whom? To the central government, right? Appeal can be made against the revocation to the central government within 30 days from the date on which the order is communicated. And this will be disposed of within a period of 3 months. And the decision of the central government on the appeal shall be final now, right? No further appeal can be made to any high court or the Supreme Court. Then section 10A is also important, that bank cannot impose any charge for using the electronic modes of payment on the clients, right? So no system provider shall cause any change in the system. This is given in section 11. For the authorization, you require RBI's permission for commencement of the payment system. Even for making any change, they have to first take RBI's permission, right? So the prior approval of RBI is important. Apart from that, you also need to give 30 days notice to your clients, to the public, to the system participants before implementing the change. However, if let's say it is in the interest of the monetary policy or in public interest, then the Reserve Bank can remove this condition of 30 days notice, right? Power to access information under section 12, 13 and 14 is there. Power to issue directions under section 17 to 19 is there, but that is not important. All right. RBI also has the powers to make regulations under section 30 and 31, right? So these are the important sections of our Payment and Settlement Systems Act. And that is all. We are done with the important sections of our module B, all the acts which are covered here. And as you could see, these are just the sections you need to know in detail about each of the provision. For that, you can join the CAIIB June 2025 all-in-one capsule batch. This is for your last minute revision. So before your examination, 1 week time, we are going to revise the whole syllabus, all the modules, but we will be focusing on how we can qualify the exam. So all your papers are covered here, ABM, BFM, ABFM and BRBL. It is there both in English and Hindi medium. Separately for English medium, you can join. I will be there. Saloni ma'am and Ashwarya ma'am will also be there. We will be taking your papers in complete English medium. Both content as well as your explanation will be in English. You will also get access to elective paper tests. Or simply, you can join the Super Elite plan, all in one plan. You will have access to the master batches, to the crash and cracker sessions, to the foundation, all the mock tests, as well as your capsule batch of all the papers and elective paper as well. Because you need to give the elective paper also. So everything will be covered in the Super Elite plan. You can simply refer to the link which is given in the description, or you can visit the Oliveboard site and app, and you can just check whatever details are there. Right now, if you avail the course, you will get the best discounts possible. So subscribe now, join the classes, and start your revision for your June 2025 exam. That is all for today. Please like the video, share the video, and we are daily bringing these important mini sessions so that you can have the important knowledge, topics, and concepts for your exam. So make sure that you subscribe to the Oliveboard JIB CIB English Medium channel. Comment down below if you would want me to cover anything else. So thank you so much. I will see you again in the next sessions. Take care and all the best.